Back out here in the Live Impact studio as we are connecting now from wildfires to what is happening today, this week, tomorrow, Liberation Day, the Trump administration deeming tariffs, reciprocal tariffs across the world will be going into effect tomorrow. So what does this mean for your money today as we bring in CEO of Alloy Wealth, financial management, all the things you need to know about your finances, the economy, and your investment of all the hard work you've done. Mark, thank you for joining us here live in
Thanks for being here.
Impact Studio. There's no April Fool.
Nope, not today.
Not today. So let's get down to business. Are we headed for a recession?
Yeah, so, hope's not a strategy, but I have to start off by saying I hope not. And there, a recession is defined as 2 declining quarters of GDP. And that would, quote, be a recession. And so when you look at like the job markets and stuff, you can see we added a lot of jobs, but that's really good news. 150,000 or something, and then all of a sudden they go, well, wait, we laid off more than that.
Right.
So you've got both sides of this coin at play, and there's a lot of tensions in the markets and stuff. They did bounce back a little bit yesterday, but there's a lot of questions and a lot of speculation of what is this going to cause?
Yes, exactly. And so what do people need to think about when they are looking at their investments day after day as people,
Right.
there are some concerns from investors?
Yeah, well, strictly from the market side of it, you have to remember this is normal. And you say, no, it's not, Mark, tariffs and all that. No, market cycles are normal is what I mean by that. And so if you're in your 30s, you're in your 40s, and you're saving for retirement, be happy if the markets go down. You say, well, that's terrible. I have less money in my 401. You're not retiring yet. It's okay. And now you're investing in things, hopefully really good quality items that are on sale. So when markets are down, you're buying things on sale. That's a great thing.
Right.
Now, if you're considering retirement in the next 5 years, you should have by now already looked at your portfolio to make sure you're not in as volatile of items. And if you haven't, that's a good time to take a look at it and start structuring the portfolio so it's not affected as much by things like we hear in the news and things like that. So it's still a good time to be an investor.
So if people are thinking about going into investing more, right?
Sure.
And they're insecure in their job and don't know how to start investing, what do you tell the younger folks?
Well, everybody wants to be an investor because that's how we make money, and it's so cool. And I want you to be that. It's good for everyone. However, it comes at a cost. And what I mean by that when I say a cost is you have to first have your fiscal house in order before you become the Warren Buffett of the world. Mm-hmm. Meaning, have you got your debt paid down? It doesn't make sense to be investing when you're trying to make 8 or 9 or 10% on a portfolio and you're paying 22% or 28% on a credit card.
Right.
So we have to put all this in order and have our emergency fund and our house in order. But once you do, then you become a disciplined investor by continually investing. Good markets and bad markets. And guess what? It works out over time, and it always does.
This is cyclical, or
That's
is this a correction?
It's we'll see. I think it's more cyclical. We're due for a correction. We haven't had a major one in a long time. But right now, it's really just being caused because everybody's concerned about tariffs. Mm. Everybody's concerned about what is this going to do to the economy. Well, I'm concerned as well, but I'm looking at the upside of it. We have a great trade imbalance. Like when you just talk about automobiles, they're saying 25%. Oh my gosh, my Toyota's going to cost me 25% more. Not so fast. First off, we're already seeing manufacturing coming back to the United States because of the tariffs. Hyundai just announced a new plant going to be built in the United States. These are investments, and guess what this does? It creates jobs and high-paying jobs, and this is the good part about tariffs. Mm. We've got to get a more balanced trade going with the European Union and other countries. And right now it's about a 3-to-1 imbalance. So we got to get this thing more balanced. And so guess what's really going to happen here? At some point, this tariffs are going to take place, and then they're going to work them out so that we lower ours, they lower theirs, and it all becomes okay.
All right, let's talk about recession.
Yeah.
So as we ponder what might be happening this year in the next few weeks, months, How do we know if we are going to enter a recession? What does that look like?
Well, again, 2 quarters of declining GDP, of declining growth. That's how it's currently defined and how it's always been defined, but sometimes we kind of move that around a little bit, it seems like. But the reality is we should always be prepared for a recession in any economy, because that's what things do. Recessions come and go. We've seen the Great Recession many years ago, and we've had a couple of setbacks, COVID and other things, but we really haven't seen a major market correction. And the way you prepare for it is just making sure your fiscal house is in order. Think about things like, is it time to sell off some things that we don't need? Is it time to pay down credit card debt by getting a second job? There are still plenty of opportunities available. You can walk in any local business and you'll see help wanted signs for extra employment.
And what do you think about diversifying your portfolio? What does that mean then?
Well, when you think about diversification, people get that confused sometimes, because diversification means I've got 26 mutual funds. I'm very diversified. Well, maybe you're not, because they might all hold the same things. Sometimes being diversified means you're diversified in and outside of Wall Street. Things like real estate portfolios. Again, rates are still high, but I was listening literally to a podcast talking about it could be a great time to be a real estate investor, and they gave some really good reasons why, even though interest rates are still high.
Right.
So there's ways to be diversified that also don't always include the typical ways inside of Wall Street. And if we are talking about Wall Street, you have to make sure you're buying and purchasing things that have not correlation, meaning they're completely different. You want a portfolio that works in all types of markets.
We learned yesterday that it's a strong buyer's market, so that makes sense. If you're in a position to be able to buy and invest in real estate, that might be one way to have some tangible investment.
And a good diversification of a portfolio.
Right. When we're talking about layoffs and unemployment rates going up, what do you say to that as the unemployment rate begins to rise, or not as high as, adding jobs, I should say, not as high as
layoffs,
as we expect, as layoffs,
Right. So this is the best advice I can give on this, and it's just common sense, but sometimes it's not very common. We were in an economy recently where people, especially young workers, were trading jobs every 13 months, every 12 months. And, I grew up in an era when if you'd had 5 jobs by the time you were 30, you were unemployable because they thought you were a bad worker. Today, that's a good worker. Oh my gosh, they were able to go from this job to that job to the next job and kept improving themselves. We're probably not in that type of an economy right now. So I would tell people to really become the best version of you can be at your current employer. Make sure you're talking to them and asking them questions about, hey, what else can I do? How can I be better? What can I do to improve myself here? Secure your position at your own company, because transferring and going to the next one just because you don't like them might not be the opportunity it was a few years ago.
All right. And then what else do people need? What's the takeaway then today in this climate, Mark?
Don't panic. It's when the tariffs are the big talk of the town today, there'll be something else that'll be the talk of the town tomorrow. The reality is we've all been through this kind of stuff. We're trying to get this entire economy into a better position. It's like taking your car to the dealership when it's making a noise and you're so worried about your car, and then you look in there and you see them working on it. Some of those dealerships now have those glass windows you can look in and see them, and you look in and you see your car all tore apart and it's real messy. And you're like, oh my gosh, my poor car. And then a few hours later they come to you and they say, hey, your car's done, and you crank it up and it sounds better than ever. That's how it's going to be with tariffs. It's going to get messy for a while, and then it's going to be better for everyone with higher paying jobs and a good, strong economy that resembles what we expect here in America.
So we need to wait this out.
We need to not panic.
Need to not panic.
Take care of ourselves. Make sure your emergency fund's funded. Be a good worker. Be kind and be patient, because it's going to work out well in the end. I truly believe we're headed for our glory days in America.
All right. Kind and patient.
Yes.
Good message for today on this April Fool's Day.
No panic.
All right? Be kind to us media folks. Mark Henry from Alloy Wealth. Any information you want to pass along if people need to get in touch with you?
Yeah, absolutely. You can always visit us at alloywealth.com, and the livinglargetax.com is a great website you can go to look at what taxes are doing.
Yes. Tax day is coming up.
It is
Now that
coming
we
up.
are in April, the countdown is really,
it.
really on.
It's here.
Okay. Mark Henry, thanks again for
Thank you.
enlightening us on today's economy. Kindness and patience. That will be our mantra for today, for sure. All right. Thanks for joining
Thank
us
you.
here in the Live Impact Studio. Mark Henry letting us in on some of the insight from a professional, personal finance, your personal finance, wealth management.